Just logging in to the YouTube thing. Better late than never, as they say. All right, so markets, it says, are up here a bit. So it's always interesting, you know, you look at what's quoted, or you look at a miner and then looking at the chart, and sometimes it isn't necessarily what you might expect to see, meaning, you know, this is up, right, marginally. Looking at the NQs, they're up, so above yesterday's close. But, so as I look at this, you know, we're looking at the multiple time frames and how this is coming down in this really schizoid way of, you know, igniting down bar, retracement deep into the red bar, and then holding and down. It was Friday, and now an inside bar here. Real mess for real. And so what I'm looking at here is just wondering, is this just all part of a, you know, a bottoming process because of the weekly? Now, I know it's a lower high, but, you know, it's a pullback. It was a deep retracement, you know, and just eyeballing it. And when I say deep retracement, I just simply say, you know, if it retraces 80% or more, I'm going to just call that deep. Nothing to do with measuring fib levels or any of that. And this pullback right here on the weekly chart is what I would say is relatively normal. You know, anytime we compress data, you know, it should bring clarity. And this does, you know, where you've got a sharp move up, or a relatively powerful move, you know, wide range bar, momentum stalls, and the pullback here. So this pullback that's happening, as schizoid as it is, we see the tails here. And so I think we, you know, unless it can get above Friday's high or below Friday's low, well, not if, it is, it's an inside bar. And, you know, is this just part of a bottoming process where this will go up? And as I said last week, what we needed to see, because of this overhead area and the way this is coming down, is some sideways price action. If, you know, this is in the cards to move back up again, it certainly could move to the downside. And so we're just, you know, waiting for more information. And that's, you know, kind of where we are here with this messy kind of price action. So I guess the takeaway, the positive to all of this, is to be able to recognize what we're dealing with and not get chopped around by it. And so what do you do in a scenario like this? Well, unless you're a day trader or a scalper, there's no point in trading patterns that look like this. So you move on to something else. And so we'll look at the other markets. And then, of course, we could look at different stocks to determine, are there better things out there? And there probably is. So the S&P is the same thing so far, an inside day, no big deal. And, you know, chop, breakdown. Is it a breakdown failure, or is it a break where it's rolling over here? So if you were so inclined to short, this would definitely be the place to do it when it double topped up here, and then wait to see if it goes down, how far it's going to go. So as I said, from a little bit longer term perspective anyway, we're looking at Friday's high and low as the lines in the sand. In other words, we've got, so far today, a trading range within a bigger trading range, you know, so a lot of uncertainty. YM, same story. See if it's trying to make the turn here. No, weekly, excuse me, deep retracement, pullback, buyer should be there. You know, so looking at charts is, okay, look at the charts, forget the news, forget impeachment, forget China, this, that. What does the chart tell me? Well, the chart tells me that these markets had a strong rally and they're trying to make a turn here. And they haven't been able to complete that yet. Russell, the weaker, right? What moved up nice and strong. Now the pullback is getting a little too far. The attempt to turn at the ideal place here has failed. And so same story. Inside day so far. We'll see what's happening. Well, it's not really a spring tightening kind of a thing, Robert. Not yet. I guess the reason being it hasn't tightened enough, so to speak. You've got a wide range here, right? It's just a giant mess. And so as we compress this, you can see the wide range. So to really wind this spring, it needs more tightening. It's just not that tight yet. How do you define that? I wish I could tell you other than, what I'm seeing here, eyeballing it. I'm just telling you, it's not that tight. And you could look at that if you wanted to put envelopes or Bollinger Bands and that kind of stuff, which I don't. But you'll just see this range here tighten up even more. And so far, I mean, as long as this holds above this level, you have to look at it as being bullish. You have to, because of the strength of the move up, the depth of the retracement. And so right now, while it's whippy and erratic, it's holding levels to support a bullish bias, meaning we're waiting for this to actually, make a turn here. Right? We talked about this last week a couple of times as to, the hourly chart coming into alignment with the higher time frame, and that's just not happening yet. So that's where we're at. Oil, coming back down to the bottom of the range. And I don't want to take too much more time here. Bonds down here, but tightening. Right. So when you see whoever start drawing triangles, right, the essence of that is a tightening pattern. Right. Whereas, okay, we can say the spring from this perspective right here is beginning to tighten. Yeah, I mean, so, I even got an email, Alex. I know you like to draw, lines like that as a visual aid, the way we use moving averages. And, like someone asked me, I think it's over the weekend, about trend lines and all that. And they asked me, well, is it absolutely, meaning like detrimental to my, ability to make money if I draw them? And I was like, no, as long as you realize the subjectivity of them so that they can't hurt you where you believe there's something that they're not. Well, yeah, go ahead and use them, So I don't need these moving averages, but, they're a visual aid that help me to recognize something faster than I might without them. Yeah. So if drawing those lines give you some, insight or edge for yourself, but that they're not really support or resistance because you drew them there, well, then that's okay. That's okay. But people that believe that, breaking of a trend line is a trend change, and without really recognizing what a real trend change is, they're being misled. And there's a tremendous amount of misleading information out there about technical analysis in this industry. You could say it's, criminal's a big word, but I mean, you could make the case that, these people do know that these things don't work. But anyway, maybe they don't. It's a whole nother conversation. Anyway, gold is trending down. It's on the edge here. It's where buyers need to step up. Silver breaking down. Certainly looks like it's going lower. The monthly, well, that's the weekly. The weekly is still in an uptrend. So at some point, buyers are going to step up. It's got kind of wild. Transports don't look so bad. We'll see if they hold here. Trading range. We'll see if it holds the middle of the range or goes down to the bottom of the range. So, we've got pretty much all the same stuff. Now, one of the things, you got internet breaking down, right? Which has been a big leader, and that's not a positive. You got technology, just a mess here. Computer software broke down. So some leading sectors are rolling over, and I don't know, as much as this market is what I said was, trying to make a turn to the upside, you look at these sectors where there's a bunch of big leaders in there and say, well, how the hell is the market going to turn up where, the big muscle stocks are breaking lower? So we're really in a, divergence, uncertainty, call it whatever you want, but the tea leaves are not easy to read here and things aren't lined up. So we go into this week with, be careful, as you always should be. There are times where everything's in alignment and you can be more aggressive, and this isn't one of them. So, all yours, Dan.
All righty, good morning. Yeah, Greg, I heard your last comments there, and one opposing view to that would be that said, hey, if the markets are holding up this well with all the leaders and sectors like that pulling in pretty hard, then maybe under the hood there's better breadth that the weaker other stocks are holding up the market now. They're rotating. All right, weekly, we only have one position. We have a bull put spread here on IBM, but we have a lot of good setups in the weekly options trader, both long and short. Swing ladder, Amazon, where we have long puts. We tighten the stop. DK, long stock. EIX, put spread, looks great. FSS, long stock, that beautiful 1, 2, 3. S, we were assigned stock, we were short puts, so on bounces, we'll be selling calls against it. HFC, long stock, nice breakout, daily, weekly, monthly. IBM, we legged into a covered call. ITB, housing, we have a put spread. Jable, covered call, breakout, daily, weekly, monthly. What a beautiful reversal right here. Controlled pullback to the 20. That was a beautiful gap play. Covered call on Kilo here. KHC, short stock. Kim, a new core trade for us, daily, weekly, monthly. Beautiful breakout. Oscar Charlie, core trade, daily, weekly, monthly. And we have a put spread, looks great. Starbucks, we're short stock on that breakdown. SITC, we're another core long. Wow. These multiple time frames look great. TERP, we're long stock on the breakout. TYL covered call, and he had an ugly retracement on Friday, but it held our stop. Whiskey covered, we got a covered call, and it's a core trade also. That's been just a beautiful trade, easy to manage. And finally, Xilinx, we're short stock. All right, let's look at some gappers now. This looks great. This is the best gapper I've seen so far. BBBY, remember it had a nasty downturn. It's been selling off for many months. And this Wednesday, MT Live, we're doing it on intelligent bottom fishing. So that's for, we're going to dedicate that to Debbie. That's what she likes to do. And we might, this might be the place to intelligent bottom fish. Bed Bath & Beyond. We had this big move up. It came back. I got flat 20 and 50. It's gapping up from consolidation. That looks really good. RH. I had a subscriber ask me about put spread on this on a breakout. And I said, yeah, it's consolidated. It's a bull rectangle, big flagpole consolidation in the upper part. I said the weekly is getting extended. That could be a wide range ending, but it's nevertheless holding well at all-time highs. Dova, a little biotech gapping up here, $8. Nothing to do with that. YY. Some of these Chinese stocks got beat up pretty bad on the news last week. More rhetoric of what Trump wants to do in the negotiations. So, you know, I don't like bottom fishing with wide range bars. Oh, thanks, Alex. But if we enter it as a core trade, then we have to sit through it. But we can also trade it as a day trade or a swing trade. Let's see, gap up to somewhere 27.50, 28. All right, if it's gapping, it's hard to tell where it's gapping. I see prints all over, but that looks like a nice gap too. ZYME, let's put that there. Baba, yeah, this was the one we actually had a put spread on this beautiful breakout, and I just got caught up in that Chinese mess. So 52, nope, there's no price void. Calm, $43, that's a bearish gap way down here. Still has room to fall, maybe 30-minute low. KNX, I like last Wednesday's reversal right there, bullish engulfing. So this one, I like this setup. If it takes out Friday's high, then it's red bar ignored. And that's bullish, weekly, monthly. Trex, consolidating above the 20, bullish, weekly, monthly. SNX, it's far from the 20, which I don't like, but pro gap, wide range, bullish 1, 2, 3, 4. That's a beast. You're in Baba from Friday? Okay, yeah, I don't remember that. Goldman is a bear, 1, 2, 3, 4, 5. Wide range bar, 1, 2, 3 inside bars in the lower third. That looks good for day trade, swing trade, and calls. That looks good, a bear call credit spread. AAL, I saw this in Barron's. They said it's undervalued, so I definitely expected a gap up. But it's in a downtrend, yet an ugly gap here. I got declining 2050. I have a topping tail on Friday. If we trade under these lows, my target is this gap fill. You know, somewhere 25, 26. So I put that in our swing letter as a short. Not only for the pattern, but also because if the gap is negated, then it's better. This is a recent IPO, Smile Direct, and they had a lot of talk, articles in Barron's about these recent IPOs and, you know, losing money and people waking up as to their true value. But this will be a beautiful pattern if we can get a W bottom. So I want to keep an eye on that. Zoom, we had a wide range breakdown on Friday. This would be a great setup if we can get a 1, 2, 3 for tomorrow. Roku, we're waiting for it to turn, and it has not turned yet. I mean, you heard me say, when you have wide range bars, I need a potent reversal. But I like this for a put spread if it can get over Thursday's high. But right now it's still weak. Still weak. There's no turn. Still a bearish 15-minute chart. It's bearish pre-market, as you can see. Beyond, it's a big fat neutral trading range, but if it can get over Thursday's high, then I like it for a put spread. Hack is breaking down. Oh, that's loud. Hack is breaking down daily, weekly, monthly. Shop over Friday's high. I like that as a put spread, but it needs to hold this upper 50%. These are all just leftover ones now. So DXC looks lower. This looks higher, GPC. Beautiful, beautiful bull flag consolidation right here with the red bar ignored. That looks great. BBT had a nice, that's another bull flag. Look at this big move, flag, bottoming tail, red bar ignored, bullish 1, 2, 3 on the weekly. That looks good. WCG looks lower as a 1, 2, 3. ADS looks lower. Dollar General, I like as a breakout over last week's high. PSA, it's on this prior pivot low, but it's bearish consolidation. SRE, I like on the long side. 5-minute high. Oh, WY, this is going to be a new core trade for us, Friday's high. ABMD is a continuation short. On Disney, I like short under Friday's low. Algen is a big mess. Herb looks lower also. I just don't know what the target is. That's a big mess. FIS. This would be a nice 1, 2, 3 if we get an inside day. Then tomorrow we can short under Friday's low. PayPal, also a 1, 2, 3. This would be a great 1, 2, 3. This looks lower right now. I put that in the letter under Friday's low. That's a short. That's a big mess. SDC we already looked at. Levi has earnings this week. GPI is strong to all-time highs. And that's my whole watch list. Let's see what we got for opens. All right, TYL, it's holding that stop, but barely.